Do you want to take control of your financial destiny? Welcome to the world of financial literacy, a realm where knowledge is the key to unlocking your financial potential. It's the ability to understand and effectively use various financial skills, including personal financial management, budgeting, and investing. Why is financial literacy important, you ask? Well, it's as essential as learning how to read or write. It's a survival skill in our modern world. Every day we make financial decisions, from buying a cup of coffee to deciding whether or not to invest in a retirement fund. These choices, big and small, impact our daily lives and long-term financial health. Let's break it down to the basics. Financial literacy encompasses 4 key concepts: income, expenses, savings, and investments. Income is the money you earn from your job, investments, or other sources. It's your financial fuel, empowering you to meet your needs and wants. Expenses, on the other hand, are the costs you incur, like rent, groceries, or that subscription to your favorite streaming service. It's crucial to manage expenses wisely so they don't consume your entire income. Then we have savings. It's the portion of your income you set aside for future use. Savings act as a safety net, protecting you during financial emergencies and helping you achieve your financial goals. Lastly, investments. This is where you put your money to work. Investments can help grow your wealth over time, providing a potential income stream and paving the way to financial freedom. Financial literacy is about understanding these concepts and making informed decisions. It's about knowing when to save, when to spend, and when to invest. It's about planning for the future while enjoying the present. Financial literacy is not just about money. It's about freedom, security, and peace of mind. It's the power to navigate the financial seas with confidence, to weather economic storms, and to chart a course towards your financial goals. Understanding these basic concepts is your first step towards financial empowerment. So are you ready to take control of your financial destiny? Now you have the basics, but how do you manage your money effectively? Well, let's dive into some practical tips for managing your money. First up is budgeting. Think of budgeting as your financial roadmap. It helps you allocate your funds appropriately, ensuring you're not spending more than you're earning. So sit down, take a good look at your income and expenses, and start planning. Remember, a good budget should cover all your needs and some of your wants. Next, we have tracking expenses. This might seem tedious, but it's crucial to know where your money is going. Whether you prefer using a physical notebook, a spreadsheet, or a budgeting app, the key is to record every penny you spend. Over time, you'll start noticing patterns and areas where you can cut back. Now, onto setting financial goals. Be it short-term goals like saving for a vacation, or long-term ones like planning for retirement, setting goals gives your money a purpose. And when your money has a purpose, you're more likely to stick to your budget and avoid unnecessary expenses. So, you've budgeted, tracked your expenses, and set your goals. What's next? Well, let's talk about emergency funds. Life is unpredictable, and financial emergencies can strike when you least expect them. That's where an emergency fund comes in. This is a reserve of money set aside to cover unexpected costs like medical emergencies or sudden job loss. Aim to save at least 3 to 6 months' worth of living expenses in your emergency fund. In the grand scheme of things, these might seem like small steps, but they're essential for effective money management. They help you understand your financial situation better, make informed decisions, and ultimately, gain control over your income and expenses. Practicing these tips can help you gain control over your income and expenses and make strategic financial decisions. So let's take these steps together and embark on a journey towards financial empowerment. After all, your financial destiny is in your hands. Ever heard of the term, let your money work for you? Let's dive into the concept of compound interest. It's a magical financial principle that can turn your small stash of cash into a towering mountain of money over time. So, what is compound interest? It's the interest you earn not just on your original investment, but also on the interest you've already earned. It's like a snowball rolling down a hill, gathering more snow and getting bigger with each roll. Let's break this down with an example. Imagine you put $1,000 into a savings account with an annual interest rate of 5%. After the first year, you'll earn $50 in interest. So now you have $1,050. But here's where the magic happens. In the second year, you're not just earning interest on your initial $1,000. You're also earning interest on that extra $50. So at the end of the second year, you'll have $1,102.50. Now, this might not seem like a huge increase, but let's fast forward. After 10 years, your $1,000 would grow to about $1,628. And after 30 years, your $1,000 would transform into a whopping $4,324. All this growth happens without you having to lift a finger. That's the power of compound interest. It's like planting a seed and watching it grow into a tree, then seeing that tree produce seeds of its own which grow into more trees. So whether you're saving for a rainy day, a dream vacation, or a comfortable retirement, compound interest can help you reach your financial goals faster. It's an invaluable tool in your financial toolbox, one that can help you build wealth over time. As you can see, compound interest can significantly boost your savings over time. It's truly magic. So, you're saving money and understanding the power of compound interest. But what about investments? Investments, my friends, are the jet engines that can propel your wealth skywards. They play an integral role in achieving your financial goals, whether it's buying a house, starting a business, or simply securing a comfortable retirement. Now let's break down a few basic types of investments. First up, we have stocks. When you buy a stock, you're purchasing a tiny piece of a company. If the company does well, your stock may go up in value and you could make a profit. Next, we have bonds. When you buy a bond, you're essentially lending money to a company or government. In return, they promise to pay you back with interest after a certain period. And then we have mutual funds. These are a pool of funds collected from multiple investors to invest in securities like stocks, bonds, and other assets. Now, investing isn't a one-size-fits-all kind of deal. It's all about balancing risk and return. Generally, investments that offer higher potential returns come with higher risk. That's where diversification comes in. It's like the old saying goes, don't put all your eggs in one basket. By spreading your investments across different types of assets, you can manage risk while still aiming for solid returns. Remember, investing isn't about getting rich quick. It's about steadily growing your wealth over time. And while the world of investments might seem intimidating at first, don't worry. With a bit of research and perhaps some advice from financial professionals, you can navigate this landscape with confidence. So, let's give a hearty welcome to investments. They're not just for the Wall Street whizzes or the ultra-wealthy. They're for anyone who's looking to take their financial future into their own hands. Investments can be a powerful tool for wealth creation, helping you reach your financial goals faster. We've covered a lot of ground understanding financial basics, managing money, compound interest, and investments. But what does this mean for you? Well, it means that you're now equipped with the knowledge to navigate your financial journey with confidence. You can make informed decisions, manage your money wisely, and work towards building a secure financial future. Let's quickly recap what we've learned. We started with the power of financial literacy, understanding that knowledge is the first step to financial freedom. Then we moved on to practical money management, discovering that a budget is not a limitation, but a tool for financial success. We delved into the magic of compound interest, learning that time and patience can turn small amounts into substantial wealth. And finally, we explored the role of investments, realizing that they're not just for the wealthy but are accessible and beneficial to us all. But the journey doesn't stop here. This is just the beginning. The world of finance is vast and ever-changing. It's important to continue learning, to stay informed, and to adapt your financial strategies as needed. Remember, financial education is a lifelong pursuit. It's not about getting rich quick or finding a magic formula for success. It's about understanding how money works, making informed decisions, and taking calculated risks. It's about planning for the future, preparing for the unexpected, and working towards financial security and freedom. So, what's next? The next step is yours to take. Will you create a budget, start saving for retirement, invest in stocks or real estate? The choice is yours. But no matter what you choose, remember this: every financial decision you make is a step towards your financial destiny. Every budget you create, every dollar you save, every investment you make brings you one step closer to financial freedom. Remember, your financial destiny is in your hands. The power to secure your financial future starts with you.